Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert the Hurt back in the United States and Lanny, the Dividend Diplomats, guys. And we're going to talk about two REITs that I own. I own one, my wife owns the other. And I like always building the current position. So, what is the best REIT between the two that we should add our money to right now?
Oh yeah, we got a REAT showdown here on the Diplomats YouTube channel. But before we do it, smash the subscribe button, give this video a thumbs up, and then get a little flick the coffee creamer over there. Because guys, we're gonna talk to you about two freaking REITs today. High yield, great values. Let's see which one is better. Get pumped up, team. That's what it's about.
All right, guys. Yes, we're bringing back REITs here. Again, dividend stocks as well, because as a REIT, a real estate investment trust, they are required to pay out majority, a substantial amount of their earnings back to you, the shareholders. We haven't talked about REITs outside of, I know Bert a couple months ago was evaluating which REIT to buy. Now we're here to talk about two REITs that, again, I own one, my wife owns another. And, kind of looking at the sector right now and, because of debt and interest rates where they are, obviously they're getting beaten down pretty decently. And it's like, well, if Realty Income, ticker symbol O, is taking a beating and people are gobbling up shares of O, the monthly dividend stock, then it's probably could give you an indication that other REITs could show some value here.
Yeah.
I haven't bought any shares of these REITs either. I haven't really done much on the last few weeks, but this year I definitely have been gobbling up shares.
Yeah, and it's a potentially interesting sector because at this time, to your point, Lanny, the sector's been beaten down, and Realty Income isn't the only player in the game here now, are they, Lanny? They aren't the only player. So this is a very good time to look at the other REITs and see how the metrics line up. So we're excited, and we're going to run them through our stock screener here with one small modification to our screener. When we run them through the metrics, instead of earnings per share, REITs use FFO, funds from operations. That's standard metric. So instead of price to earnings ratio in that first metric, price to FFO ratio. We're going to use the dividend payout ratio. Then we're going to use the history of increasing dividends. And then we'll look at that bonus metric, the dividend yield.
All right, guys, a little fun tale here. So I own Broadstone Net Lease, ticker symbol is BNL. And why and how did I fall into shares of this REIT, which I do own quite a few, 100 shares of them. This goes back to the Store Capital days, ticker symbol STORRIP. They got acquired, and I had all the cash from the proceeds from dissolving my shares there and moved it right into Broadstone Net Lease. Similarly, in my wife's account, we owned a couple of REITs. One, I think the most recent one was Apartments. APTS was their ticker symbol, and they also got acquired. Yeah. So we moved that cash from that merger into BRT Apartments Corp, ticker symbol BRT. So, as we're evaluating other stock positions, dividend stock moves to make, wanted to put these two REITs together in the ring. Stock prices close as of June 22nd. Again, I own BNL, my wife owns BRT, short for Bert.
I love it. I've been smiling this entire time thinking about that. And just so everyone knows, REITs come in all different shapes and sizes. They all have different purposes. They all have different kinds of real estate holdings. Some are vacation properties. Some are cell towers. A lot of them are properties and commercial properties. So BNL is a diversified holding. They have industrial properties, healthcare, restaurants, retail, office. They're very diversified, which gives you a large net, which protects you from different cycles within different sectors. BRT Apartments. Any guesses what kind of properties they have, Lanny? Not really sure.
Grocery stores, right?
Yeah, grocery stores. Yeah, they're the cell tower one.
Kroger stores.
Yeah. Hey, Kroger with that 12% increase today. Shout out right there to the dividend increase. So just, it's a sector. We're looking at a diversified real estate company and an apartment real estate company with BRT. Just want to throw that out there before we start looking through some more. Yeah.
And while we're at it, let us know in the comments what REIT or REITs you've been buying this year in 2023. What other REITs are you liking right now? So let's go through BNL. We're just going to go through one REIT and compare it to the next REIT. You know what, Bert? Let's do it your style. Let's go metric by metric across both companies. Let's just freaking do it that way.
Tonight. Let's go metric by metric, head to head. You want to represent BNL? Is BNL going to be
I'll
Hogan?
BNL. Bird, you're going to be yourself here on this one. I'll be BNL, which, hey, I would make a comment on BNL, but let's hold that right now. But price for BNL as of June 22nd is $15.45. Adjusted funds from operations per their last earnings release. And I took the last AFFO, which was 34 cents, and annualized it out to $1.36. I do want to pause there because management also expects AFFO to be $1.40 to $1.42. Therefore, using $1.36 is actually a little bit more conservative as well. So that equates out to an AFFO ratio, again, similar to PE ratios, typically lower the better. But 11.36 for me. What about you, Bert?
All right.
How's Bert look?
19.28. Their AFFO annualized from earnings is 144. That gives you an AFFO ratio of 13.39. But remember too, I'll bring out exactly what you said. We used AFFO of 144. That's also conservative because management's expecting AFFO of 150 to 161. So even with the conservative metric here, it's 13.39.
Nice. So slightly higher, about two full points higher than BNL. So let's get into the dividend payout ratio here. Again, you're typically going to see higher payout ratios because they, send out substantially almost all of their, earnings back to the shareholder. So currently BNL has a 28-cent per share per quarter dividend. There could be another increase somewhere down the line this year. We'll have to see. But that's $1.12 per share per year. Right now it's about 82 and 35 basis points, about 82%.
All right, BRT has a flat $1 annual dividend, so their payout ratio is 69.44%. So very low on the REIT spectrum. I say it's a pretty low payout ratio for this sector.
He's a good. Now let's talk about dividend growth. So BNL hasn't been around for too long. It's been positive over the couple of years that they've been a publicly traded stock and have paid a dividend. They started paying a dividend towards the end of 2020, and then they kind of grow once or twice during the year. So I kind of looked at like, okay, if we annualize where they're currently at for 2023, we're looking at about a 3.24% growth this year. Again, keeping things all consistent. 2022 versus 2021, they grew about 5.37% on the dividend. So you can say, hey, it's positive. Dividends are growing, maybe at around a 4 to 4.5% mark.
I like it. I dig it. BRT comparatively, 5-year dividend growth rate 6.40%, and they've increased it for 5 years. So both are trending upwards, and both are in that middle, I'd say mid-single digit range. So I'd say probably about the same here for both of them. Although BRT is slightly higher with the longer history.
Yep, longer history. Now to get into the dividend yield, guys, REITs typically you should be getting a little bit higher yield than your dividend stocks. You are taxed typically at your ordinary income rate, though there are some qualified business deductions you might be able to take on REIT income. But nonetheless, BNL is now trading at 7.25% dividend yield.
BRT is 5.19%. So the yield is much lower, but that makes sense in the scheme of things. BRT's got a lower payout ratio, lower dividend yield. So that trends with what you saw comparatively to BNL that has a much higher payout ratio and a much higher dividend yield.
From that 5-year average yield, you won't really see one for BNL right now since they haven't been around for 5 years. But what does Burt look like?
It looks great. 5.64% yield, which is interesting because usually if the current yield's higher than the 5-year average, that's a sign of undervaluation. Flip that around. The current yield is lower than the 5-year average. That would mean stock price went up, denominator went up, yield is lower than the 5-year average. So it could be a potential sign of overvaluation at the goal.
Year to date for BNL, the stock price movement, they're down about 4.5% to 5% this year. And they're down about 25% over the last 52 weeks. This probably is not going to look that great stacking up to BRT.
Well, it's flat for the year. So 0% year to date. They're right back where they started. The year in the 52 weeks down 12.68%. So performing better than BNL over the 2 comparative periods.
Yeah. So guys, just to do a quick comparison, you'll see the screenshot. Obviously, all the stats are on the screen, but lower AFF ratio for BNL. BRT, though, has a lower payout ratio. BRT, I would argue, has a better dividend growth history, dividend growth rate. They've had more experience there. That's strong. Dividend yield, though, BNL takes the cake here at 7.25% versus 5.19%. But BRT performs much better right now from a stock price standpoint.
Yeah, I very much agree. So what you, between you and your wife, you both own one of these, Lanny. What's your gut reaction here for BNL and BRT leaving this analysis?
Gut reaction is, is it right now? Is this the right time to go in? Obviously yielding over 7%. I would be averaging down my position on BNL. Looking at the BRT, similarly, yielding over 5%. I think I would be slightly averaging down that position as well. I wouldn't mind maybe grabbing a few shares, maybe throwing $100 at each just to get a little bit of yield, a little bit more exposure to REITs as we've been, kind of building up VYM substantially and all the other ETFs plus high, consistent dividend growth stocks like, like Tyson, like UPS. So it might be nice to get a little bit of exposure to the real estate this way.
Yeah. So what I'm hearing is you like them. You wouldn't mind adding small amounts to them, but you're not going all in and saying, I'm just going to dump a boatload in right now. You're putting that money elsewhere.
Correct. Now, what are you guys doing here? If you had to choose between BNL and BRT, what are you doing? Let's leave it just to those two. Let me hear that feedback. And then similarly, let us know the feedback on what other REITs you like, what other dividend stocks there are to buy right now. What stocks are you buying right now heading into July, guys? And again, if you haven't already, subscribe to this channel. Give this video a freaking thumbs up, guys. This is Saturday. We're making some noise here all day, every day, buying dividend stocks, making pathways to financial freedom, baby.
And just remember, if you're not with us, you're against us, everybody.
Guys, that was Bert and Lanny from the Dividend Diplomats. Over and out.